Hello guys and welcome to the 90th edition of the Trading Opportunities webinar. This is Nirav, and before we proceed, let me very quickly go over the microphone at my end. By the way, those of you who are currently live in the webinar, if you can see a screen share as well as my audio, please do let me know by typing in the comment section of the live chat, of course. While I quickly just check things at my end here. Yeah, it is working at my end at least. So in that case, without wasting any time, guys, welcome to our 90th edition. And let me get a few things sorted here. Yes, guys, so before we proceed with the webinar introduction and whatnot, let me just quickly get done with the disclaimer here. On screen here now is the disclaimer that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, your investing, or for any other purpose, you yourselves will be liable for your profit loss or loss of profit. Rest of the disclaimer, please, you can read it yourselves. With the disclaimer out of the way, now let's head over and let me give you a very quick introduction, guys, for those of you who are new here. My name is Nirav. I'm the admin and owner of 50 Years Market Analysis YouTube channel as well as 50years.com website. This is a series of trading opportunities webinars which we conduct weekly every Friday. We do these webinars. The time is always the same, 7:30 p.m. IST or 2 p.m. GMT. So whichever time zone you are in, just convert it accordingly. 2 p.m. is in GMT and 7:30 is in IST. All right. So within the past 89 webinars, we have captured 169 trades, out of which 5 trades were from 89th webinar itself. Right. So these webinars, as I said, we conduct them weekly. So we have a lot of these webinars here already done. And the last one, as I was saying, 89th one, we captured 5 moves, which were all discussed again live in front of you guys. Right. So with this 90th, let's get ahead and discuss the markets. And yes, a few more things. I am also the author of this book. You can just check it on the Kindle version. It's available electronically. And lastly, we have been keeping a track record of our past forecasts, which were conducted, past forecasted live webinars as well as videos, which were conducted monthly back then. So as you can see, these sheets have the accuracy. 2016 we had 83.34%, 2017 87.5, and you can just scroll through and check any of these sheets. The most important thing which I just want to point out here is that we have kept a track record and it is 80% plus consecutively for 6 years, which is unseen in this industry. And keep in mind, this is a public record. Anyone can just go ahead and check it anytime. All the links of the videos are here. What we said is here. What happened or did not happen is written here. Right. So the date and everything as well. So these are a very well organized track record for 6 consecutive years. As I said, we have managed a exceptionally high industry leading accuracy of 80% plus, going as high as 90%. Right. So with that being said, let's now head over to our actual current webinar. The way we will proceed is with the charts of Euro USD followed by crude oil, gold, S&P's 500 and Nifty followed by Bitcoin in the very end. Right. So now let's head over to the charts. By the way, those of you who are live in the webinar, I can see a few people online. Can quickly let me know, is the audio and video feed working well at their end? While it is working at my end, it will be better to get a confirmation from the general audience. Let me load up the charts. And a few more things we have to check here. So for quick reference, we'll also check time to time what we discussed in the past webinar and how it worked or didn't work. So getting on with the, one second. Yes. So getting on with the actual webinar, let's begin our discussions with the chart of Euro USD. Last time when we discussed this chart, the market was supposed to, it says Geo. So we were in a long trade when I discussed this market last time, and that seems to have worked out itself nicely. So what we'll do is, before beginning the actual discussion, we'll just very quickly head over to this chart and check out what was being said in the last webinar. And then we'll take a look at things right now. So this is the recording from the last webinar, and obviously you can just go to the website, sorry, the YouTube channel yourselves, the like section, and check the 89th webinar. This is the discussion on Euro USD. So this is the last discussion. I'm saying that we are possibly completed the wave 4 and heading up for wave 5, right? And I was in a long trade. Now, obviously, the market has gone up from here. We'll just note out the price for discussing it on the current chart. The price is 1.08688. Now we'll just head over to the current chart. Last discussion was done on 17th of November. There it is. And this is the wave 4 we are talking about in the last discussion, which I presumed was complete and was long. And from there on, it has gone up, and obviously it has hit our upside expected target levels. So making it one of the 5 analysis which we discussed playing out perfectly. Keep in mind, we only discussed 6 markets, so 5 played out perfectly. I don't know if we had a trade set up on gold, because that is the only one I have here in the notes which does not have a plus one. But anyways, we'll look at it when we reach there. So that was for our past analysis, guys. It played out, and do keep in mind I repeat this multiple times because I'm not aware of how many of you people are following the webinars regularly on a week by week basis, and how many of you are just jumping in live for the first time. So it is important to show what we are doing here and how it's going, right? So right now in the current analysis, what I have plotted here is a flat correction seemingly. I was trying to get long, but I did not want to trade this wave C down, which is what was proceeding. So I exited before this webinar itself. What we currently have here is a possible 3-wave correction in the other direction from the point of reference coming in at price level of 1.08519 time 22nd of November 2023. From here on, the flat correction, sorry, zigzag correction is in progress. I'll just draw it on the rough hand side, rough right hand side. So a zigzag correction will look like this. In Elliott Wave terminologies, a zigzag is a 3-wave correction with the first leg being called an A, followed by a corrective leg or a leg in the downward direction called B, and the next leg is again in the upward direction called a wave C. So here is our A, and the B is expected to be a flat correction, which is or should be then followed by a C wave in the upward direction, right? A flat correction is again a sideways correction. Instead of going in deep into it, I'll draw a rough box here. You can see the price action is contained within it. That is one of the general characteristics or general outline of how flat will look, not a rigid rule or anything. Now again, since the B is complete, and as I said, wave C will go again up, the general idea is that wave C will take out the high of wave A, right? So in this case, the high of wave A is coming at 1.09304. So that basically means we are expecting this leg to take out that high. That's the first thing to keep in mind. Now, there is one another thing that this structure might become a little bit more complex than a simple A up, B down, and C up. So instead of discussing the exact details of it, I'll just give you a generalized idea what will happen in that case. In case it becomes complex, what we will see is we will see more propagation in this box range. Market may go up a little bit and then go back within the range, and go up a little bit and back in the range. Complex corrections have the ability to form weird patterns. Basically, that's why they are generally called complex. Anyway, so that's the general idea or the general expectancy which we will look at if the market proceeds as a complex correction. But as I said, the general idea is that we are looking for this market to take out the minimum of wave A high here. Now, coming to the targets here, that's the minimum target here. Second thing we can do is we can project the wave C by using the length of wave A. So we are getting targets at 1.09 456 and one is above that. Let me just check quickly. 9550. Let's see. So these are the two main targets we are looking at currently. If I were to just conclude it, by the way, I can still see there are people in the live chat, but I have not gotten any confirmation or any comment so far. At least one confirmation would be appreciated so that I know that the stream is actually getting to you guys and I'm not just speaking to myself. So yes, getting back to our analysis, what I'm seeing here is something like this. As we just discussed, target minimum is the wave A high. After that, we expect the market to reach these levels if it continues the uptrend, which it generally does. At least it will take out the wave A high to a certain degree. So nothing much to add here. This is a rather simple application here. So with that being said, let's now head over to the next chart, which is the chart of crude oil, which is also the title of this webinar. 1 second, guys. Yes, let me see if my message is getting along. Or is just an issue? Yes, my message is going there. Okay, so now getting forward, let's now head over to our discussion on CL or crude oil. A little bit more complex than our general expected path here on crude. Yes, and before we go ahead with the crude oil discussion for current session, let me see what was our discussion in the last webinar. I believe we were looking for long trades. Let's quickly see what's the price on 17th of February, November, sorry. There is 17th of November and we were expecting. Yes, so I recall before we discussed the recording or check the recording, I recall the analysis was there were two possibilities. Either the market was set for reversal here because we had a impulsive correction in the downward direction, or there was a second possibility that this was going sideways as a wave 4 and then will little go later on go lower. Now the very clear distinction we made in the webinar was that if the market sustains above the 38.2 retracement, then we will likely bend towards the bullish count and look to trade accordingly, which is what really happened. So now let's have a very quick look at the recording itself on crude oil, which will be around here somewhere. And let's see what we were talking about. Yes, so this is the recording from last session. And as you can see over here on the right hand side, I had pointed out that this count suggests that either the wave C is complete, and if it's continuing, then it has one more leg remaining. And this was the level which we drew this blue line. I'm just trying to draw on top of the recording. Let me see. Let me pause the recording at once. So this is the blue line here. Whatever this level is, we were expecting that if the market sustains above it, then we will look for long trades here, which is what really happened here. On the live price, somewhere here was that level 74 something, roughly speaking. It was actually 74.7 here. So if the market sustain above this level, we will look for long trades, which is what happened. And since then, we have been in a very strong impulse up, followed by correction down. And do keep in mind, we were able to capture this leg down in our live Slack group, which by the way is available for access in case you are interested in getting these market updates live and catching my trades there. We'll probably have a look at it later, but let's now first quickly have a glance at what this market is right now doing. For that, let me just go to the lower time frame chart. Actually, this should work. Yes, it is fine. So this is the lower time frame chart, and actually it's the same 1 hour chart. And what we have here is a possible impulse up as a 1 up, 2 down, 3 up, 4 down, and 5 up. Now, in Elliott Wave terminologies, an impulse is followed by a correction, which is the case here, a little bit deeper than expected. But we were able to capture both these legs live. First this leg and then this leg in live market. Now let's see what's really happening here. So our primary analysis suggests that we are expecting one more leg up, and basically it should look something like this, roughly speaking. So first leg up is already complete here. Then there's the correction, right? It looks like LinkedIn comments are not showing up here. So I have apparently gotten comment here. I'll just check it 1 second. So as I was saying, we are seeing a correction here, and once this correction is complete, we are expecting one more leg up on crude oil, right? Now this one more leg up will or should, if it's correct, if this analysis is correct, should take this market higher than the level of 78.731. So at the very minimum, if this market is following this count correctly, then at the very minimum we are expecting this leg up. Now there is a very clear way to distinguish if this market is going to do that or not, is simply we do not expect this market to go lower than this last low again. Not even the low, we can just put a stop around 74.662, which is, by the way, I am currently holding a minor long position on crude oil. The plan is if it works in our favor, it gives more signs of strength, then I will add more to the longs. Currently, the position is not very big, but that is the plan to build it up if the analysis plays in our favor. So there is one thing we can just put a strict stop at 74.662. Second thing is we can instead just draw our channel, right? And the second thing is, instead of using this strict line here, alert line which I have drawn, we can just put an alert on the channel, and if the market goes below this channel, then this invalidates our bullish count. That is, in that case, this market is probably doing something else, right? So if that is the case, then also we can use that as a stop loss level. So far, as I said, we have two different variations on how we can use this. And 1 second here. Yes. So as I said, we have two different variations of how we can exit out of this analysis in case we think it is not working out. Secondly, 1 second here. Yes. Second thing which I have to add over here is that this leg down has been a little bit more deeper than what we generally expected, right? So that is also one of the reasons I'm staying a bit cautious here and not adding my full long position here. And lastly, I just wanted to have a quick look at the longer term count, and the plan was to get into this count a little bit more detailed, but because I'm not seeing much of a participation, or at least any participation on YouTube, probably because of the holiday, I'll just get along with it faster than as fast as possible. So see, generally what we are seeing here, I'll just conclude it from the point of reference of bigger count. From this point of reference, just observe the price 95.48. We are seeing A down, B up, and C down here. Now, this generally is the minimum we expect in Elliott wave correction. That is a first leg down called an A wave, next leg up called a B wave, and then a last leg down for C. So this is the minimum expected corrective structure, which is already done here, right? Second thing which can happen is that the market may continue the correction as a complex. So in which case it will form an X wave and then another leg down. In this case, we do not have any clear evidence for a wave X as of yet. Generally, the wave X is will either go sideways or it will go a little bit up as well alongside continuing time correction, right? So in this case, I have some clues, but there is no clear evidence if this is an X or this is a leg up. So we are not going to comment too much on it. From a temporary basis or a short-term basis, it does look like a correction is warranted here, and that correction is expected to be a zigzag. There currently is no evidence of this being a flat or a triangle or a complex even. And it looks like it is forming a simple zigzag. So that's why I'm going with this kind of count. If this is correct, then after this point, because this is the A up, this is the B down, we expect at least one leg up for C, right? So completely swing perspective by speaking, we have one leg up expected, but we do not have a strong conviction. Why do we not have a strong conviction? Because this wave B correction has been much deeper than generally expected. So while I am long, I'm not going to go full long or with complete size positions. And that's about it for our discussion on crude oil, right? I don't think there's anything to add here. So we'll just, I'll just quickly check it for a sec here. Yes, these are the expected levels. 79.10 minimum is what we expect to the upside, followed by 79.33. So with that being said, let's now head over to our next analysis, which is of gold. So interestingly, in gold, our analysis suggested that we will look for longs if the market sustains above 2005 in the discussion done on 17th of February. Again, you can just check the recordings yourselves by heading to our YouTube channel for 50 hours market analysis and clicking on the live section. And this was the last webinar, 89. All of these webinars have timestamps embedded or whatever they call it on YouTube. So if you scroll here at the bottom, you will find all of it, time and everything here listed. So yes, as I was saying, this market we discussed last time, and we said that above 2005, if it sustains, we'll look for longs. But forget about sustenance; it actually took a resistance there and reversed. So that's that. I mean, short term wise, I could have seen some sell trades here. Maybe we did see something here and something was posted in the group, but nothing substantial. So we'll leave that to that and move to the current analysis. So current analysis, what we have on CL is suggesting that we may be seeing a corrective structure. I think I'll add a few things here. Well, first thing here is that we seem to be having a diagonal complete here as a wave one up, and then a correction in the downward direction as an ABC leg down. This is the correction. Now, from here on, what we are expecting in this market is either the correction continues sideways or this new leg or a new impulse to the upside is in play. For both of these cases, we have figured out the upside levels as well. Now, coming back to the current analysis, if we are assuming that this market is heading up as an impulse, then this is your first leg up complete here. And then we are expecting second leg going on as a possible flat, right? If this market is a possible flat, then a new leg up is warranted, right? And the minimum we are expecting is 2039, and T minimum is actually 2028. Right, so these are the expected levels. These are the minimum levels. Now keep in mind, if this analysis is correct, I'll have a very quick glance at the long term count as well. But so far, if this analysis is correct, right, then this is the minimum we are expecting, 2028 followed by 2039. And in case this market is heading up as a wave 3 impulse, then I'll just quickly switch to the high time frame chart and show you a quick thing here. So note very quickly here on the higher time frame chart, we are at multi-year resistance level, and this resistance level actually starts where the price is currently situated. So I'll just say the range is between 2007 to whatever that is, 2073, right? So that's what I was pointing at. If the market stops at 2039, which is we have pointed out, or 2028, so they will be somewhere here, over here actually. So somewhere here we will be having those reversal levels, or the second reversal level. And as I said, if the market does sustain higher as a wave 3 up completely, or straightforward up, then it is going to take out all these multi-year highs. So one is coming at 2073, 10th August. Then the next one is near the same level, 21st of February. Then the next one is near the same level on 1st of May. So all of them are pegged near the same highs, and this is a strong resistance zone. So again, repeating myself here, but it is that important that I can, or I should. So if we cross this, we are expecting extreme upside in this market. And until that does not happen, we are prepared for short-term reversals as well, or maybe even complete reversals, who knows, for 2039. I personally think that the bullish count is more strong here, and a break to the upside is possible or highly likely. But then again, it can also stay sideways for a bit before going up. Like a flat correction can also be there on the cards. So again, not adding too much to it, and let's now head over to our next discussion of the S&P's 500. And it looks like we were also in longs on the S&P. So now let's quickly head over to the actual chart. Is this the chart we are following? Yes, this is the one. So on S&P, 1 second here. Yes, so it looks like I was long on the S&P's 500 for from 4504, and it literally just went up from that level. So what we'll do is now we'll just quickly head over to the actual chart and see that for ourselves in the recording. There it is, somewhere here. Again, those of you who are not regular here, I'm just checking the recording of our last webinar and seeing what we discussed. So this was it. I was long here, and we were expecting this to be A down, B up, and C down as a wave 4, which should then be followed by an upward leg. So let's see what I'm saying in the recording. Yes, as you can see, I'm drawing that we are expecting upward movement here. So now that's all we needed to check. The price is at 4503, as you can see. We must have discussed some upside targets, of course, and all of them are already hit. Let's go to 17th of February. There it is, 4503. This is where we were doing the last webinar. And yes, as you can see, I was drawing upside arrow and it has gone up and hit our upside targets. So again, one of the out of the 6 markets we discussed last time, 5 worked out, and this is one of them, S&P's 500, right? So now let's look at the actual chart here. So in the actual chart, what we are seeing right now, I'll just discuss it. It's a little bit not the clearest count, I would say. What we are expecting, or I'm expecting here from this point of reference at the price level of 4559, I'm expecting a correction first and then a leg in the other direction. Now, the issue which I think, or not the issue, I should say, unlikely thing is, or not even unlikely, this is a less probabilistic scenario, I should say, is this market will generally go and form a clearer structure like a zigzag or a flat or something like that. But in this case, it does not look like a clear flat structure. It definitely is not a zigzag, of course. So I'm inclined to believe that it may be forming a complex structure here. So as you already know, complex structures are not necessarily the best thing you can predict upfront. Although I personally will be able to capture some short-term movements here, but swing perspective-wise, what I'll suggest is that we consider this whole region, this price between the levels of 4569 to what is this 4526, as a region where this market can just revolve and spend some time. Do keep in mind it can also go a little bit above this level and then jump back within it. That is just the characteristic trait or feature of what you call complex corrections. Now, with that being said, what are we really expecting from it? We are expecting that once this market sustains above 4571, then the longs can take off. That's just a conservative way of looking at it. The actual better way to understand it is that once this market forms a low near the bottom part of this, let's say the last bottom 20-30% of this zone, if the market forms a low within this marked zone, which I'm just right now marking, then I will be interested in considering long trades here, right? And if we take long trades, the stop loss will obviously will be the last low, which is currently coming out at 4526 here, right? So that's about it for S&P. If we see a low forming within the lower part, we will look for possible reversals and take minor positions there and add on to it. That's the my current scenario or current outlook on this chart. And the second outlook is conservatively speaking, you can just stick around 4571 and above it. You can go long, but that will only be good enough for scalp longs or short term trades because the stop at that point will be extremely big. Nothing to add here. Yes, probably we can figure out the targets for the next leg up once this 4 is in play. In place, we currently do not have the end of wave 4. So nothing to add here to this chart. And with that, let's now head over to our next chart, which will be the chart of Nifty 50. And before we proceed to that, those of you who are later on watching this webinar as a recording and finding the content of use, I suggest or request, I should say, that kindly share this content with your friends and colleagues in your trading groups, WhatsApp groups, LinkedIn, Slack, or whatever you guys are using for your own trading and analysis or discussions, whatever you do, right? And lastly, if you are finding this content of use, you should keep note that we are also having a Slack private group wherein my live analysis is posted every day, multiple times, and also my live trades are posted. In case you are interested in something like that, you can head over to the contact us page here and request details for the Slack private group by filling it and selecting the subject matter on the left. Right? It is request only for now, so you will have to go through this process to request details. Right. With that being said, now let's head over to our chart of Nifty's 50. And in specific, we are looking at Nifty 50, but we'll probably discuss a bank Nifty trade. We were able to capture an extremely huge leg in the downward direction, somewhat 460 points or something like that. So we will have a very quick look at that as well. Now, before we proceed with that, let me just quickly check. Yes, around this time, 5. So here's the discussion for Nifty last time when we discussed it somewhere around here. This was the analysis suggesting that we are expecting a sideways movement for wave 4 and then ahead then a leg up for new highs most likely. Now, since our discussion on 17th of November, the market has done exactly that. It has remained sideways in this range which we discussed, and it is still countable as a triangle, but more importantly, it has remained within the price range. So again, one of the analysis which is picture perfectly working out as we discussed within the last webinar, right? So in case you are not able to get a view of how to trade it, not every analysis is going to be traded as a long or short. Some sideways movements, as you know, will be traded as options, spread strategies, and similar ones. So again, I'm not going to dive deeper into it. Those who know it already have an idea that if you're expecting a sideways movement, you can sell the puts, sell the calls, and hedge them as well. But in this case, as I said, it has remained sideways, and that strategy did exist. If you were following us, 6 things we discuss every webinar, and 5 of them in the last one played out. So, getting back to our current analysis, it may still be a triangle. If it is, we expect the market to remain sideways a little bit more before heading higher and taking new highs, right? And additionally, it is also possible that this market is not a triangle, in which case we'll just draw this box, which is coming within the range of 19,878 and 19,664. And we expect that the market will just remain sideways within that range, right? So long story short, above this range, above 19,878, I'm looking for longs, and we expect possibly huge upside may be seen, but at the very minimum, I'm expecting 19,953 on this market, 953 or 954 something, right? So that is the target minimum. But as I said, it is possible that this market goes up much, much, much higher than this level. So that was our quick take on Nifty. And it looks like one of our regular viewers, Louis, is finally here. Hello, Louis. It looks like you are joining it near the end. We are having just one chart remaining here, but it's finally good to see somebody in the chat. Hopefully, the next webinars will not be like this. And I am believing that the consecutive holidays have something to do with the lack of people here. But anyways, now heading over to our last chart, which is the chart of Bitcoin or BTC. So let's see what we were discussing in the last webinar on Bitcoin. Last webinar, Bitcoin, let's just open up the recording here. So we were expecting a wave for continuation in Bitcoin, and it is exactly how things have proceeded so far. Let's quickly check. This is a discussion on Bitcoin, and let's see what we were doing. So by the time we completed the last webinar, we had so many people in chat. So comparatively, this webinar looks almost dead. So he's saying thought you start at 10 a.m. EST. We start always at 2 p.m. GMT, which will come out at 9 a.m. EST, Luis. Always the same time, 9 a.m. EST. Right. So, anyways, getting back to our discussion, as I was saying, this is our last analysis of Bitcoin. And of course, you can always go ahead into the 50 eyes market analysis YouTube channel. Our handle is at the rate of 50 eyes. Click on live and just check this last webinar, 89th webinar. There is one added advantage. These all have timestamps embedded in them, which I do personally by checking the time and typing it in the YouTube's backend. So you can just hover your mouse over this. There's one more thing you can do. If you click on the more section here, that is the description of the video. All the timestamps are present here as well. And yeah, I think chapters, they are also called chapters. So you can just click on view all and it will show up on the right hand side like this instead of the live chat. So let's just close that and focus over here on Bitcoin. We are expecting sideways movement. Let's see what happened. Sideways movement was expected. Last analysis 17th November. This was the market here. So somewhere here was our price, I believe. 17 November, 17 November, 17 November. Yeah, somewhere here. So what I marked here, this arrow, somewhere here we were when we were discussing it. And this market has since then remained sideways. So much so that it is possibly still continuing sideways, right? So this was the analysis, sideways movement, and this market is, one second, and this market has remained sideways, right? So one thing to add, one second, I have a question here again. Let me see, check that. Do you have an opportunity to trade every day or have to wait for invalidation of every, one second, I can't read the whole comment. Possibly have something to do with the vertical monitor I'm using for this live thing. Let me quickly open up YouTube and check here. So the question is, do you have opportunity to trade every day or have to wait for invalidation of every few days? So Stephen, that's not how I personally trade. What I'm discussing here is the outlook for the week, and if we have a trade here, sort of from a swing perspective. What I do is sometimes I get 10 trades, sometimes 15 trades, sometimes 20 trades. And I do personally update all of my trades in the Slack group. For instance, here is, I believe the shared screen should be able to show you the Slack now, right about now. So here is, for instance, our, what is this, S&P 500 updates. So since November 20th, which is the Monday or the first day of the week, we had multiple trades here. For instance, either a triangle, blah, 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 my commentary and chart post. And of course, all of this is available here. So yeah, this was one of the trades I had been meaning to discuss it, but I think I forgot. But this was one of the trades we took on S&P. This was the biggest win of this week. And we added scalp longs after the break of this triangle. And this, by the way, is the price on 17th November, which we discussed. So I added scalp longs on the break. This was the target expected around 45443 or something, or 44 something. I had huge positions on here, and it hit our target minimum, which is much before that last target, and so on and so forth. It went and re-entered scalp longs and so on and so forth. I have, like you can see, within this 15, 831 and 924. So within this 1 hour, we have two trades here on S&P. Right, so on and so forth. We keep updating analysis or counts or whatever we have. I had taken some multiple trades that day. So this is just for S&P. Same goes for all the other charts: crude, Bitcoin, gold, etc., etc. I do trade Bitcoin very, very less. It has more to do with the high amount of brokerages levied by our broker. But overall, there are a lot of trades, and what I'm discussing here is, I would say, not even 3% of the, or not even 1%, I should say, of the whole thing we do. Yes. Again, and those of you who are wondering, this Slack group is request only. So if you are interested in joining, you can send your request by heading to our contact us page, 50as.com/contact us, and select subject matter as requesting details for Slack private group, and you will be provided with the details. So anyways, now getting back to our analysis of BTC or Bitcoin, currently what I'm thinking here is that we may be seeing a possible flat under continuation here. Now there are two things possible from this price level of what is this, 37999, or let's say 38,000. We may have completed a flat here, and this market may be heading up. Second thing is that this flat is possibly still continuing with the A of the flat here, the B of the flat here, and may even turn out to be an expanded or a running flat, in which case we are going to see a leg down in 5 before this market heads up finally. Right, so these are the two major outlooks on Bitcoin. Both are suggesting that from a swing perspective, this market is going to give us possible long trading opportunities. Right. And with that being said, I personally will look to consider it upside movement above 38,779. Let's say 38,780. So above that, longs become valid. The very small target is 39,166, but that is a scalp target. And with the high commissions with my broker, I do not think I will be looking for scalps on this market. So with that being said, I think we have covered more or less all the major markets that we come here to discuss, right? And as I said earlier, if you are liking the content, definitely hit the like button. I've seen many times people giving a lot of views on the video but forgetting to hit the like. And yes, lastly, if you are enjoying the content, make sure you share it with the relevant audience. Try to share it with at least 5 of your contacts or 5 of your groups if you are in some Discord group, some Slack group, WhatsApp group, or whatever you guys are using to share your ideas if you are doing something like that. Right? Your sharing is very important to us, and the more the number of views, the more is the likelihood of these webinar series continuing. So, with that being said, let's put an end to this one, and I hope to see many more of you guys in the next one. Take care and bye.